You're welcome to today's stream. Yesterday we had a very good trade. These were the trades from yesterday. Now, if you joined the stream yesterday, you would have been able to get in on these trades that got yesterday on stream. And bullish on gold for today. I'm bullish, but waiting for confirmation. I'm yet to see my confirmations yet. Gold is there's no there's yet to be any bullish momentum to enter the market actually be as of yet. And so this is what I'm waiting for. Here's where my setup comes from. Now on the 4 hour time frame, we had a break of structure here. I usually switch between charts when using and trading gold. I use this per zero point 0.1 CFD from forex.com and as well as others. Now on the forex.com chart, you can see clearer that we had a candle close above this previous high. All right, which makes me more confident in my bullish bias. Right. But I had to find the point of interest. This because this price created another flow leg here. And the kind of fair value gap it created was a retracement gap. So the fair value gap was my or is my point of interest. Watching watching for price to get to the 50% level of the fair value gap, and that's where price currently is at. And at this point, based on the fact that this is coming from the 4 hour time frame, I am currently watching 2 time frames lower on 15 minutes time frame for confirmation. What I need to see is price create a bullish order flow leg from this region. What that would do is that it will tell me that price is ready to buy. Price is ready to move upward, and to also give me a very good point of interest. Now, the 79% level of this displacement did not leave behind any fair value gaps, sadly, and so I yet don't as of now I don't have any entry. So I'm gonna wait for price to come to this 78.6% level, and if price does get there, and we are going to be bullish from this point, it will be nice to see price give us rejects within this region and then finally give us a bullish order flow leg. So that's what I'm currently waiting for, and that's what we are going to. That would decide if we get a trade to take today. Now, whether we make profits from the trade today, it's unknown. Whether we make losses, it's unknown. All right, I'm entering the market with a clear mind, free of any form of bias or any form of fear. Right, I'm just going to be trading what the market shows me and what the market tells me. That's what I'm going to do. So this is what I'm currently watching for on gold. You're welcome. You're welcome to. So you should currently be able to see my chart screen. I give a breakdown of what I'm currently watching for today. So I'm bullish on gold, and this trades right here were trades from yesterday. Trades I took yesterday, both entries, right? And for today, my bias comes from the now on the 4 hour we had a break of structure, right? Now I'm waiting for confirmation to be sure that we're bullish. But my point of interest is the 50% level of this 4 hour favor league. Watching price to see confirmations for entry. Now, based on the fact that this point of interest is coming from the 4 hour time frame, my entry confirmations are going to come from the 15-minute time frame. As of now, there is no bullish order flow leg, no bullish displacement to tell me that momentum has entered this market or this is where you should enter from. And so that's what I'm currently waiting for, an indication that price is going to move upward. Now, this line I placed here is the 79% level of the Fibonacci. Um, it's possible. It's a possibility that price will retrace back here, and then when price gets to this region, we start finally seeing displacement, right? Just based on gold. But this is what I'm currently waiting for this, and this will, like, if I get this trade, likely be my only trade for today. Right, already had two wins yesterday. Right, and let's see what the market has in store for us today. So if you're just joining, let me know your name and where you're watching from in the chat. Your name and where you're watching from. Let's get to know each other. Let's connect. So if you're just joining the stream, your name and you're streaming from in the chat. So I'm just waiting for a bullish order flow leg from 15 minutes time frame to give me confirmations that we're about to start seeing bullish momentum, right? And a lot of trading basically is waiting. You're welcome, Mr. P. You're welcome to the stream. All right. So a large part of trading is waiting, and I feel like we are going to be doing a lot of waiting today. It's worth it if in the end we get very, very, very good trades like we did yesterday. See your name and where you're streaming from. Um, so I a little bit about myself. I think that's what people usually do on streams. All right. So I'm Jeremy. I've been trading for 4 years. I think 4 years now. Going 4 years plus. Exceeding 4 years at this point. I started in the synthetic market in currencies. That was August last year. I had to do a lot of relearning, and thankfully, I've actually found that I was way better with gold. Gold is my best pair for me. A lot of people say they don't like gold. That gold is scary, and all gold for me is just be it's just all right. Works well for me, and I think the trick the or the secret to whatever success is just finding a single pair and sticking with it, finding a single pair and sticking with it, and that's what I've done with trading gold. I started early on. I was trading multiple instruments, but okay, gold, content with gold. So what I'm currently waiting for, I'm waiting bullish- for a bullish order flow leg, bullish displacement to tell me that we are finally bullish. We are clearly bullish, and that will also give me my point of interest for a trade. What strategies do you trade? Do you guys trade? What strategies do you trade? Most people trade SMC. Yeah, I think SMC is the most popular strategy out there. What strategies do you trade, and how well does it work? Does it work on gold? Let's see. Do we get if let's see if we get the momentum. That's nice. I'm glad. I'm glad for that. I'm glad for that. Glad. I like to know how Epoma is, and I'm glad for that. What is now you have to protect your profits, right? You have your goal now should be to try to keep a consistently positive equity. Try and keep those profits. So what you do now is not not you won't achieve that by necessarily becoming to traded setups. But now that you've gotten one trade, one win in the day, right? You can decide, okay, today I'm not trading anymore, right? Till tomorrow. There are still 3 more trading days within the week, right? Or you can decide you can be like, okay, since GBP USD gave me profits, I'll focus more on and start removing some pairs from where I trade. Like the you trade better when you are able to instruments, so you have just one instrument that you trade, that you focus on trading. It will work way better for you. Right. So you have to decide. It has to be an instrument. The main thing with sticking with one instrument or a few instrument is content. Be an instrument where you believe you or you, if I stick with this instrument, I can make all the, truthfully speaking, truthfully speaking, you truthfully speaking, you don't more than one instrument to make all the money you need to make from trading. Like that's something I hold on to. That's what helps me stick with one instrument. With just, you don't need two instruments. You don't need two pairs or three pairs or four pairs or 10 pairs to make, to become as rich as you envision yourself being through trading. Like, just one instrument is enough. One pair is enough to make the money you can ever dream of making in trading. And so, that when you understand that, when you have that, when you think that way, you get to start realizing that much of the extra instruments are just excess. Yes, and the thing about trading multiple instruments is that your risk exposure is increased. You are your if the chance, if you making losses on any trade on a single pair is 50% or 60%, when you trade two three pairs, it's increased from just 60% to 180, 120, 240, like that. Right, so you want to reduce the instruments you trade. And trust me, if you stick with this 1 month, in 1 month's time, you start seeing, you before the end of a month trading just one instrument, you start to see the positive difference. And then when you then also understand that the fact that you are trading one instrument means that you will necessarily not be able to trade multiple times in a week. At most in a week, you might just get two or three high probability setups because it's just one instrument, right? There's only one direction that price is moving in, and price is always moving from high probability regions to low probability regions, right? So if you are trading just one instrument at that point, it reduces your trade frequency. In a week, you might discover that you only take two trades, three trades, and out of those two or three trades, two could be profits, one be loss. Even if two are losses and one is profit, if you stay in your winning trades, if you allow winning trades to run through and get to your targets, your risk to reward makes it, your profits are making back your losses and making back some extra profits, right? And so that mathematics behind trading. Profitable trading is mathematical. You have to focus on the numbers, and then you have to condition the numbers to such a way, to an extent that the numbers work for you. You have to make the numbers work for you. And so one of the ways to make the numbers work for you is basically reducing the number of instruments you trade. When you do that, your trade frequency reduce. If you are trading just one instrument and your trade frequency is increasing, where you used to take four trades in a week, and now you see yourself taking 7, 10, 20 trades in a week, that will now let you know that it's no longer a pair issue. It's a skill issue and it's a discipline issue, right? It's either way, you get to know what the issue actually is. It helps you become a better trader.